What's up, everybody? Trade Space here, trading live again today, February 9th. Couple minutes late to the market today. That's okay. So, yesterday was kind of a big day. We hit 5,000 in the S&P. Big round number. It'd be logical that the bears would come in and at least begin to sell. Just kind of see what happens today. See if today ends up being a bear day. Alrighty. Let's go over some things real quick. Start our analysis from the daily chart. Some of you may notice I have an extra indicator up today. A little bit of an extra one. That is my 221 EMA. I'll talk about that here in a second and why I use it. Or I'm beginning to use it more. I think it's kind of a good idea. I'll explain why in a little bit. Okay, so we're still trending up. Still in a reasonable channel, kind of in the middle of the channel. And if we were to draw a midline, just going to draw an approximate midline, it would be somewhere around there. I mean, I get that this isn't completely straight, but there we go. See, before it's bounced off the midline here, found resistance at the midline here, resistance, possible resistance again today. We're going to find out. If we look to the right, we see that we're over 5,000, which is a big round number. It is a magnet price, and so we can expect at least some bears to come in here and begin to start selling. So will they turn it into a bear day? I'm not sure. I will say, though, if we look very closely at the ES, we see that we have a big bull bar closing at its high, and it lacked follow-through. So very good possibility that this bull bar would become climactic. It hasn't really. The market has continued to go up, but it has not gone up with a whole lot of speed, especially yesterday being an inside day. It was frankly a really tough day to trade, and if you recognize that early on that it was probably going to be an inside day, then you probably didn't bother to trade most of the day, which was fine. Just get you a quick break. Okay, so let's see. Let's go to the 1 hour. And this is, I actually want give me just 1 second here. Okay, put up the prior day lines. On the 1 hour, it is a little bit distracting when you look at it. Just kind of ignore it for now. We're just going to be brief, real brief here. You can see that we're in an uptrend and we are in a channel. We can draw similar channel lines here, here, and this is because our data doesn't go back very far. This right here is probably about the midline of the channel on the daily. So that's where we are on the 1 hour. Like I said, we're just going to be here briefly. Let's go to the 5 minute. And in the 5 minute, we have our inside day. So we have our open, high, low, and close. High, low, close. Then we had this big long range. I'm not going to draw it out. We had this big long range. Touch the channel line. And now we began a good push up. And if we zoom way in, we can see that this 5-minute bar right here was, you can say it was volatile. Was it climactic? You know, it didn't really end with a whole lot of strength. It was ended about 50%. So it was climactic in the sense that it was large and, you know, it had a lot of volume to it, but it was not climactic in the sense that it truly ended with strength in the bar. Okay. Now we're bouncing off of the 221 EMA, just a slight dip below the channel line, and I mean this could just be a wick on a daily chart. I'm assuming I was even upright. I'm actually not going to, I'm going to take that out. I'm going to redraw it on the 5. So this brings us to the 221 EMA. The 221 EMA is actually really simple. If we look at it on the 5-minute chart and then we go to the 1-hour chart, we can see that they're in the same place. The 20 EMA of the 1-hour chart is in the same location as the 221 EMA on the 5-minute chart. So that's why I'm starting to use it a little bit more. We're going to try it out, see if it fits my trading at all, and I think it could help view things on larger time frames. I think it could really help with that. So I'm going to mess around with it today. I am also watching my stocks. I've been calling out in my Discord. Woke up very, very happy this morning in the pre-market. Let's see what we can draw here on the 5 channel. Just going to leave it like that for now. We may readjust later. It does have this big volatile break of the channel, and when you look at a volatile break of the channel like that, it's often climactic in one way or another. Because bulls don't, generally speaking, they don't generally want to buy above here because they're not even close to fair value. Everything is about buying low and selling high. Absolutely everything. It's really just about, you know, where, how low. Okay, let's look at the 2000 tick here. Zoom way out, we can draw something similar. So let's see, we'd be about there and about there. Okay, and this is what it looks like on the 2000 tick. This line may be a little bit high. See, I have it set up just a little bit differently on the 5. I probably could rearrange this top line a little bit better. And a lot of this should just be wicks on the 5-minute. I'm going to keep my 2000 tick right there though. Every line is important, even if it doesn't match up the same. And there's several reasons why it could not match up the same. It could be because of the wicks. It could be just because of bar size or just how it's perceived, or the fact that, you know, when we switch to a 2000 tick chart especially, there's a lot of climactic bars and sudden bars with a lot of movement very quickly, and that can all you know, predetermine your drawings of your chart. you're unsure what to trade, just look at your major levels. Look at things that you know for a fact that this is here, no matter what. Things like the bottom of this channel line. You know, I can do without the top of the channel line being exact, but I have to have this exact. I'm not looking to go short up here. You know, I can almost just pretend that this doesn't exist. It does exist, but I can almost pretend that it doesn't, because by the time that price gets up there, worst case is it's going to hit my trailing stop after I've trailed several times. I also say this is a channel down. Pull up out of the channel, attempt to go lower, cannot find an equal low. Had a nice top here, had a nice little bull push, so I think that there were at least some bears that got stopped out in this area. Here we are again, kind of testing it. We do have some support off the 20 EMA. We had a big push. I say a big push. We had a 3-bar push above, 3-bar pullback. Now we're kind of finding some support. You could potentially take an entry here. Entry would be right above there. I don't think this is good enough for me, quite frankly. You could look to enter here. Let's look at the 5-minute again. It can also really help to see how many legs the 5-minute chart has. 1, 2, quick 2 legs down. It's kind of all on the same channel though, not a lot of channel expansion, but it's also at previous support. Okay. Did have a nice little push above. If you're a bull and that's the bar you got filled on, it's not the best bar. The bar does close at its high, but how much room did it really take up? How much room did it expand? It certainly didn't expand above the previous high. So yeah, this bar certainly has more bulls in it than bears, but it's not something that's super significant either. We might go a little bit higher, but if we do, it's probably going to be chopped. I mean, we have this bear bar right here. What was the market's response to this bull bar? It was a bear bar. So, you know, if anything, it's just in a small range. And really, this whole thing may be a range if you think about it. It might be. We'll see. Climactic bar. I mean, it's a small range, but it might be. It might be. Something like this, right? Because it's climactic bull bar, climactic bear bar, climactic bull bar, bear selling right above here. If we look at this move up too, when we think about our market cycles, we never really exited our market cycles, right? We have a bull bar that's mostly inside of the previous bear bar. So that is a range. We have a doji bar, which is a range. We have a 3-bar range, followed by another doji bar, followed by climactic bull bar. So there's a lot of ranging action right here. I don't think that there's a lot of strength. think that we need to sit and wait and be patient. We'll find a good opportunity somewhere. I'm also watching my stocks today. Doing pretty well. Currently, I'm in Autodesk, Bank of America, SPXL, and Quadruple X. I am happy to say that I was in the market when the S&P hit 5,000. I mean, granted, I didn't actually trade yesterday. Yesterday was an inside day, but I was holding Quadruple X, which is the S&P ETF. So I like to think, at least in one fashion or another, I did help contribute for the S&P to get to 5,000. Bouncing off of our range line perfectly here. Think about this, guys. Think about the market cycle. I mean, how was I able to tell that this was at least a small range in here? How was I able to put up my range lines so accurately before the market got there? Just thought about it, really. I mean, as I'm going along here, I'm asking myself questions, and I'm constantly challenging my ideas and my beliefs. If I'm wrong, I want to know that I'm wrong before, I make a financial mistake, a bad trade. It's important to analyze, but it's also important to be robotic. And it kind of, it kind of goes both ways. Some people can be great analysts and, be great traders. Some people are generally better off if you stick to the keep it simple method. And you just say, if you just take a second entry off of a channel line and you do that enough times, you only need to be right 40% of the time to make money. And if you have an even higher traders ratio, you don't even need 40%. But if you just blindly take a second entry off a channel line every single time, will you generally have more losses than someone who can maybe read the price action a little bit better and decide how strong the market actually is at that trend line? Then yeah, you'll take more losses. But at the same time, so that same person may not be able to analyze as well, and they might sit there and overthink. And when they begin to overthink, a lot of our forward trading fears can come in, and they can begin to have fear of losing, fear of being wrong. They can begin to overtrade or have FOMO or anything like that. So, we don't have to be knocked very far off the track to completely derail ourselves. If you think about a train's going along, it takes a lot to stop a train, but it doesn't necessarily take a whole lot to derail the train. And that's kind of how we are as traders too. We're sitting here, we're watching things, and whenever we sit down to analyze, we need to practice being good analysts, but we also need to realize that that's not everything. Analysis isn't everything. We have a strategy and we stick to it for a reason. Is this a channel working up? Let's see if we can draw it. Is this a channel working up? I mean, yeah. Yeah, it is. I don't like how it forms, though. We look at this. Let's look at the 5. You know, at the 5, it's really just a range. We are at the top of this channel on the 5, too. We might move it up a little bit. Still has support off the 1 hour 20 EMA, which is my blue line. We need to be careful of these two. Equal high, pullback, 1, pullback, second entry long. Why is this not a good second entry? So we're in a range. Even if we break this range and this is the breakout, we don't know that. We don't know that for a fact. Really waiting for the market to expand more. If this is going to be an inside day, I don't want to be trading. Don't get me wrong, you can trade and make money on inside days. It's just, you know, you can also just think of it like the market giving you a break. IEP up to 1914. I've been talking about IEP in the Discord too. I think it could be a really good value play. Get to hold it for a couple of years. Let's look at this weekly chart. We're right up to the 20 EMA on the weekly chart. Maybe if you wanted to get into IEP, maybe we would have one more attempt down, and you can get in, you know, somewhere in the next couple of weeks. We also have, like, I don't think we're going to get down to 15 again. I mean, we might. If we get down to 15 again, I'm definitely buying it, but we do have some long wicks, climactic bear bar. I'm looking at it on my other screen. I don't think you can see it, but you know, we're in a kind of thin area when it comes to volume. What is a thin area of volume? Ooh, thin area of volume. It's generally where the wicks are. Still in the range. It was a climactic bull bar. Still in the range. Let's see, how big is this range? 4.25 point range. So if we have we're trading a 2000 tick, and our average risk is 2 to 2.5 points. That means that our minimum take profit has to be 4 to 5 points. Generally, just stick with 4, and I'm not usually 2.5 points at risk. At least not too often. But if we stick to a positive traders ratio, which is your reward being 2 times your risk, and we're in a range that's, what is it, 4.25 points? About 4 points. I mean, can we take a trade in that range? No, we can't, because we can't do it and have a positive traders ratio. It's not possible. It's not possible. Straighten this out a little bit. So we got to be aware of the size of the range too, because we can't trade in here. What we can do though is we can wait for a break of this range and try to fade it. Especially if it's a downward break and we can get a second entry trigger to the long side. We might be interested in that. Bank of America has been a real tease to me lately. It's essentially like, if you were to look at the charts, it's essentially like trading in barred wire, but it's trading in barred wire at the bottom of a range. And that's something honestly, I'm not quite used to seeing. 1, 2, 3, 4. Today, possibly. Probably going to be a range day, another doji. 5 dojis in a row. Now, Bank of America, it had like this range, then it had a fade of that range and a test to the high. There's definitely some bulls here at the bottom of the range. I wish there were some more. But here I am. I'm in, let's see, what are the stats on this again? We might be breaking low too. Try to keep an eye on this, but what are the stats on that? Is it here? I just reorganized everything, so have to forgive me. Yeah. So this is why I took it 2.5 to 2.16. 16% stop, 70% probability. Average profit, average loss, blah, blah, blah. But I was really interested. The maximum losses this has ever had buying and selling on these dates is 2. And it lost in 2022 and 2023, so I was especially interested in this trade because if it works out, then, well, basically if it didn't work out, then Bank of America would have to do something that it's never done before in its history. So continue to watch and monitor that. Very, very ranging. Lots and lots of ranges. Let's see, what else can we look at? Autodesk, doing well. So what's up with Tesla? Looks like it's starting to at least have another push up, but Tesla has been so bearish. I do think it's a good value trade. I'm not sure if I would want to buy it above 100 though. I think that's what it was. Let me look back. Yeah, maybe like anywhere between the 150s and the 100 range. It's kind of a big range, but anywhere in there, I think it'd be really nice to own Tesla, just as a long-term hold. Okay, still in this range. Ranging. This is where the market gets a lot of people, is in these tight ranges like this, because it's hard to make money. I mean, who can really make money? And people are constantly getting liquidated too. Bears who sold this, who kept their stop losses. I'll just put up a horizontal line. Bears who sold this, who kept their stop losses here, were liquidated here on a false breakout. Bulls, they haven't really been liquidated anywhere yet, but ranges are volatile, so it'll probably happen at least once. And even if it doesn't, it'll happen in another range. Bulls get liquidated, bears get liquidated. Looking at the Tesla charts too, we have this big gap, and we need to test that gap again. I think this gap in this 20 EMA may predetermine, if Tesla is going to get another leg down or not. There was a really big leg down to begin with, so I would imagine that wouldn't be too shocking to me if Tesla got another leg down. Looking at the daily chart, by the way. Oh man, market just wants to float in this 5,000 range. Here we are with a small break of the range again. Do you think this will be it? Do you think this will be the breakout? It's got to show me some evidence. I've got to see some strong evidence. What is strong evidence, you ask? It'd be a big bull bar that held above this high right here. Not one like this. This is tricky. You have to watch out for these. If you're looking at this leg right here, if this is the leg that we're on, and you're looking at this leg right here, and you look to your left and you see this is the previous high, and you look at how this bull bar closes, and you say, okay, well, it closed within 2/3 of its high, and if you look to the left, it closed above this high. And you say, oh, well, this must be the breakout. It's strength, right? No, it's not strength. And if you placed a stop market order right above it, you would have been stopped out. It's not strength. Strength would be something that ended up here. Strength would be a bull bar that has an unusual size. This is relatively normal size if we look back. Look at the previous bar, look at this bull bar, look at that bull bar, even some of the ones in this leg here. They're not an unusual size, so they're not as significant as what some people are going to think that they are. This is not the breakout. And let's look at how much ranging price action we have. I mean, we've talked about this earlier. Climactic bull bar, climactic bear bar. We never entered a normal market cycle here. It was all range because it was mostly inside bull bar, doji bar, which is a range, 3-bar range, doji bar, climactic bull bar, followed by a bear bar. So this is a lot of range. a lot of ranginess, and it's common to have climactic bars at the tops and bottoms of ranges. So no, we need something significant. We need like a bull bar this size or that size or even bigger than that. We need it to close above the high. We need it to close above here. That might be a breakout. This is unconvincing though. This is nothing. It's unconvincing. Don't get trapped in these tight ranges. Sometimes the market does this where it'll range a lot the first little bit of the day, and then it'll have a breakout, and then it'll have, you know, a big bull day, a big bear day, whatever. It's okay to wait for that. It is okay to wait. Something you can do is just switch to a 15-minute chart. And then just every 15 minutes you can go out and check your charts. Every 15 to 30 minutes. Then if a breakout occurs, you'll know about it, but it's not something you can watch. You have to watch very closely. Go about your day first. Watch a higher time frame. When you see the breakout, come back to your computer, start trading. Bank of America also in a very, very tight range. Notice I only really talk about the Bank of America. It's just because it's the only one that I'm not really, it's not really so much that I'm worried about it, but it's just, I don't know, it's just interesting, I guess. I wish it would go somewhere. Even if it was down. Starting to look like a little bit more of a convincing break. Let's see how it finishes. Remember, it's all about the finish. Glance at the 5. A little bit more convincing on the 5 as well. Not a lot of strength, but probably enough to get a minor second leg up. Right, so you think of it as a few things, but I'm going to think of this as a range. First leg, range, second leg, and I'm guessing it's going to be a minor second leg up. Still not really something I'm looking at trading. Now, if I'm proven wrong here, and it ends up being a bigger leg than what I anticipated, then I would be interested. But I need the market to prove me wrong. Prove my theory wrong. Remember, when we do have a theory about the market, we have a lot of evidence. This evidence points one specific direction. We have to continue with that assumption until we're proven wrong. And we can be proven wrong in several ways. We can be proven wrong by sitting here and watching the market and saying that I think that the market's going to do this. I think that the second leg up from this is going to be relatively minor. Say, okay, it's a fair statement. This is why I think it. And you continue to think that until the market proves you wrong. And when the market proves you wrong, go back, try to find some evidence of something else, and see, see where to go from there. Could it be a measure? Maybe it's a measure. If it's a measure, then let me grab it. Thank you. This would be the measure. More or less. Because it's range, channel, 1 bar channel, range, channel. So you could think of it as channel break channel on a minor level. We could also have a 2/3 failure, potentially, especially if it is relatively weak. And if it is relatively weak, then if it is relatively weak, 2 seconds. Here's what I'm going to do. Because I just don't feel like this top is drawn very definitively. Here's what I'm going to do. Just going to use a trend line. Trend line and a trailing stop is going to fix a lot of this clutter. And let's see if we can get rid of some lines on this chart too. Clean up these charts as we go along. Which channel is more valid? That one's more valid. Think of push up, range, push up, range, push up. I don't know, where are we going to have another range? Do we need these range lines? I'm going to get rid of this one and keep the top one. Isn't that a lot cleaner? It's much cleaner now, isn't it? All right. Yeah, I am in Autodesk, but I was I wasn't really paying good enough attention, and it was in a micro range when I was looking at it, and I wanted to get it at the bottom of the micro range, and I just could not do it. Just didn't. I should have put up a limit order and just kept it there, but it's okay. I mean, my position's not horrible. It's up 3 or 4% at the moment. And Autodesk is going so strong too. If we look at the weekly chart on it, if we look at the weekly chart, we can almost just see that it's an obvious range fade. And we are coming back into the range right now. So we ought to, my biggest hope is that we would test the highs of the range, which is this 344 level in Autodesk. So my hope is that we'll get there in the coming weeks, maybe towards the middle of the year or so. If you wanted to keep holding for that long, you certainly could. You certainly could. With the way I've been swing trading lately, I've been just going with what has the best historic probabilities. And if I find a really good historic probability, then I'm going to be interested in it. And I'm in and out of positions so often. It's really nothing. Still waiting for some more definitive movement. Still want some more definitive movement. We could think of this too as a lower high. I don't know. Should I take an entry there? You think I should? If it was like 1, 2? It's a bear bar, so we are on first entry. First entry, high 1. I don't know. I mean, I might be interested in it if we come back. Because if we come back, we didn't make a new high. At least not yet. We didn't make a new high. It might be kind of a double bottom off the 20 EMA. But my profit target is really small. If this is to fail, I'm kind of at the 2/3 point for it to fail. I don't know. Maybe I should take a trap instead. Maybe I should think of it more like a double bottom. 3 points? Yeah. Alright, still on the first entry. Now we're on a pullback, so we need a second entry. I don't know. Should we take this as a trap? I would like to find a little bit better reason to take this as a trap entry. Somewhere I wouldn't really mind finding a little bit better reason. I definitely don't want to take this as a second entry because my entry would literally be at the high. Be no way that I can make money on this. It didn't even come down to like a double bottom, which would already be a small profit target anyway. The double bottom. It does kind of make me want to take it more as a trap. But I don't really see enough actual evidence to warrant a trap entry either. It's not like we're at some major point of resistance. I mean, it's minor resistance. It's a previous high. Like, yeah, there's going to be some bears selling here. Is there enough to make me 6 points? No, I don't think there is. I'm not convinced. I'm not convinced. I don't want to enter here long because there's just not a good profit target. Some people I've heard are suggesting that the market is pausing and it's waiting to see what will happen because of what's going on in the Middle East with the Houthis. Is that how you pronounce their name? you know, one of those small groups that no one's ever heard of. That's apparently a lot bigger than everyone thought they were. But, you know, I don't think people really knew who these people were before recently. At least not most people. But anyway, nevertheless, you know, these people attacking everybody's cargo ships, trying to be OG pirates. You know, some people have said that their market's going to pause for a little bit until this is resolved. And that may be true, but I feel like that would be true more in the price action since, you know, we can have bad news and the market still go up. If you're in any of my discords, then you'll see a post that I recently made that was basically explaining that the market doesn't care who the president is or who's in control, and that's because the people who control the market, they need to make money no matter who's in office. So American futures are extremely, extremely resilient. They've really shown themselves throughout time. Oh man, so I think we're just going to sit here and range the rest of, well, maybe the rest of the day, but more than I would like to be here. So I'm going to go ahead and call it today. It's a no trade day. I might come back later. I've been trying to do this at least a little bit, just to kind of give some price action analysis and some things of, like, you know, how I think and whatnot whenever I trade. And hopefully it's useful, even if I sit here and not make a trade. It's okay. Anyway, guys, if you're in any of my Discord groups, then I'll see you there. Lots of exciting things happening. And apart from that, then I'll see you in my next video. I'll probably be up here day trading again. Okay, guys. I guess real quick before I leave, let's look at what we can go through, what we can look at the rest of the day. Watch out for chop. Let me go to the daily real fast. Watch out for a lot of chop today. Lots and lots of chop today. Watch out for that. We had a previous inside day and an overnight push up. Get rid of these drawings here. So, just be aware that today may be a doji day. And if it's not a doji day, it probably won't be a really big day. We are right around the middle of the channel line. Go back here and draw it back out. Right around the middle of the channel line. So this is where a lot of ranging action can also take place. So be aware of that. Be aware of ranges. Be specifically aware of tight ranges because there's a lot of them today. Careful trading. It's okay to take the day off. It's okay to take, you know, a few minutes off to let the market get through these ranges, especially if you feel like you have to trade. Okay, guys, that's it for me. I'll see y'all later.